What's up guys, my name is Ignas, welcome back to the channel. SCHD is one of the most popular dividend ETFs out there, where buying into one ticker, you are getting the total return of the Dow Jones US Dividend 100 index. So SCHD provides a lot of diversification for a dividend portfolio. It currently has 101 securities in, and there is a low expense ratio to hold it, now at 0.06%. So holding this ETF provides with security, on at once owning many different quality dividend paying names. But on this channel we are all about picking individual stocks. So today our focus are the top 10 holdings. These are from various market sectors and takes up over 40% of the ETF. The names are Merck, Pfizer, PepsiCo, Texas Instruments, IBM, Home Depot, Verizon, AMGN, Coca-Cola and Cisco Systems. So today we'll be adding these names into my dividend investing watch list to check how much undervalued or overvalued they currently are with respect to their 5-year dividend yield histories. An early thumbs up would be greatly appreciated, and with that out of the way, let's begin. So we are now in my dividend watch list on Google Sheets, and here we have the tab for the first name Merck, ticker symbol MRK. Here it's its dividend yield history for each quarter of the last 5 years, and on average in 5 years the stock was trading at a dividend yield of 3.04%. So the worst dividend yield was back in 2019 at 2.5%, under the 5-year average for 17.69%, and then the best yield was in the second part of 2021 with 3.56%, over average for 17.22%. But if we would be taking the stock right now at a dividend yield of 2.97%, that is unfortunately now a bit under average, minus 2.21%. So this shows that the stock is getting expensive and we may be getting better opportunities elsewhere. The second largest position from the ETF was Pfizer, ticker symbol PFE. We have its dividend yield history, and on average the stock was trading at a dividend yield of 4.26%. So we have this anomaly in the data, where in 2021 the dividend yield is given at 9.47%, over the 5-year average for 122.23%. And then the yield bottomed in the beginning of 2022 at 2.91%, under average for 31.71%, and still taking the stock right now at a yield of 3.63%, that is under the 5-year average for 14.82%. So with the third name we are going into a different market sector, from healthcare to consumer staples, and that is PepsiCo, ticker symbol PEP. We have its dividend yield history of the last 5 years, and on average the stock was trading at a yield of 2.83%. So the best time to get in was in 2018 at a yield of 3.31%, over the 5-year average for exactly 17%, and we have recently seen the worst yield at 2.56%, under average for 9.51%. So getting into the stock right now at a dividend yield of 2.63% is not that much better, since it's under average for 7.04%. Now the fourth one is a popular semiconductors name, Texas Instruments, ticker symbol TXN. The dividend yield history shows that on average the stock was trading at a yield of 2.4%. So the worst time to get in was back in 2019 at a yield of 1.79%, under the 5-year average for 24.46%. And then we had some opportunity in 2020 with the yield going over 3% at 3.13, over average for 30.34%. And currently we again have it over 3% at 3.23, so that is the highest it has been in the last 5 years, over average for 34.5%. Now with the fear around semiconductor industry, this seems to be quite an interesting opportunity right now. But we still have plenty more names to go, and let's see if there are other even more undervalued names there. So with name number 5 we are still in the tech sector, and we have the tab for International Business Machines, ticker symbol IBM. Out of its dividend yield history, we calculated that on average the stock was trading at a yield of 4.62%. So the worst yield was back in 2017 with 3.87%, under the 5-year average for 16.28%, and the best one was by the end of 2020, 5.52%, over average for 19.42%. Though if we would be getting into the stock right now at a yield of 5.14%, that is still over the 5-year average for 11.20%. So there is some opportunity there, though not better than we saw for Texas Instruments. So we went through the 5 largest names, and there are still 5 to go. Now we are going to the consumer discretionary sector, and there is a home improvement name, Home Depot, ticker symbol HD. Out of its dividend yield history we calculate that on average in 5 years the stock was trading at a yield of 2.22%. So the worst yield was by the end of 2021 at 1.64%, under the 5-year average for 26.19%. But if we would be getting the stock right now at a yield of 2.67%, that is now the highest it has been in the last 5 years, over average for 20.17%. So quite a decent opportunity if we are interested on increasing our exposure in this industry. For the 7th name we are going into communications. And here we have Verizon, ticker symbol VZ. So we have its dividend yield history, and on average the stock was trading at a yield of 4.62%. So for the majority of the last 5 years, the stock was trading with a yield between 4 and 5%. The worst one was by the end of 2019, very close to 4% at 4.02, which is under the 5-year average for 13.01%. But this year the stock has continuously been selling off, and now the dividend yield has skyrocketed to over 7% at 7.05, so that is way over the 5-year average for 52.55%. That is an awesome dividend yield, way higher and even more undervalued than we saw for Texas Instruments, so if we aren't afraid of any dividend cuts, this could be an awesome opportunity getting into right now. For the name number 8 we are coming back to the healthcare sector, and here we have AMGN, ticker symbol AMGN. Out of its dividend yield history we calculate that on average the stock was trading at a yield of 2.75%. So the worst yield was back in the beginning of 2020, under 2% at 1.92, below average for 30.07%, and we saw the best yield in the second part of 2021 at 3.35%, higher than the average for 22.01%. But if we would be getting into the stock right now with a yield of 3.08%, there is still some opportunity with it being over average for 12.17%. Stock number 9 is another large staples name, Coca-Cola, ticker symbol KO. Out of its dividend yield history, we calculated that on average the stock was trading at a yield of 3.14%. So the best yield was in the first part of 2020 with 3.51%, over average for 11.63%, and then we saw the worst one with the first half of 2022 at 2.87%, under average for 8.72%. But right now with a yield of 2.20%, that is close but still just a bit over the 5-year average for 1.77%. For the 10th stock we have communication equipment industry, and the name is Cisco Systems, ticker symbol CSCO. Out of the dividend yield history, we calculated that on average the stock was trading at a yield of 2.97%. So the worst yield was by the second part of 2019, with 2.38%, under the 5-year average for 19.92%, and we saw the best dividend yield by the end of 2020, with 3.64%, over average for 22.48%. Interestingly enough, now we have the same dividend yield, 3.64%, so we have reached those same highest levels of the last 5 years, and if the stock goes lower again this year, we will be then getting that best dividend yield of the last 5 years. So we went through all the 10 largest stocks from SCHD, and it seems that currently Verizon is the one with the best dividend opportunity. Now if you would be interested in doing a similar analysis on another dividend paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting dividend opportunity out there that I'm still missing. And that was it for today. Make sure to support the channel and leave a thumbs up under the video. Last week I've analyzed and compared several different stocks, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.